Today, I want to talk about how a certain prolific stock currently has over 140% legally disclosed institutional ownership. Not 140% short interest, but 140% of the float owned and disclosed. I want to explain why this is a massive deal and why the SEC will be instantaneously involved. So stay tuned and let's make some money. Now to dive straight in with the key information. So we can see that MULN Automotive, or MULN, currently has 147% institutional shares held long. Their float is obviously only around 160 million shares, but somehow 254 million shares of that 160 million are held and reported by institutions. This obviously doesn't even include the likely hundreds of millions of shares that are also held by retail investors on top of that. It's likely MULN has a float only of 160 million shares, but upwards of 500 million, if not maybe even closer to a billion shares, are held and issued in total. Now we can currently see from Yahoo, the float for MULN is only 164.92 million shares. But as I said, somehow 254 million of these are held by institutions. You could even look at the shares outstanding, which is 243 million, but still, even regardless of that, even more than those outstanding shares are held by institutions. Now, I think it's also kind of important to line up where this data is in the MULN scale of events. MULN recently, as of a few weeks ago, performed a reverse split, but both of these datas have been updated since, so this is therefore showing the true float and the true number of shares held. MULN also filed the other day to issue an additional 500 million shares, but as of today that so far has not yet gone ahead, and this data is also still a few days old, and therefore neither the float or institutional ownership has been updated for this additional 500 million shares. Now, after my video the other day from the SEC going after one of these short sellers that has been illegally short selling shares, it wouldn't surprise me if the SEC get instantaneously involved as a result of this disclosed figures. Now, I personally wouldn't suggest investing directly into MULN, obviously, as MULN is indeed the victim of synthetic short selling, and that's why MULN over the last 3 months has fallen 91.58%. Obviously, MULN is one of those targets and victims of synthetic short selling. The data is obvious, but I still wouldn't go investing into MULN as it's currently in that territory of being delisted. As the masked investor tweeted, he said, "How in all that is green on earth is MULN down today?" He said something isn't even adding up. As I said, it's likely because MULN obviously is being synthetically shorted, and that's why more than the entire float is held by institutional investors. But as Tony Denaro tweeted, it's also a stock that's about to get punted off the Russell index. It's got no revenue, no production, more dilution being announced, and it's likely a delisting is looming. And that's why, even though MULN is an obvious victim of synthetic shorting, it may not be best to load the boat on MULN, but simply wait for the SEC action. As I said, I think this 147% institutional ownership will likely draw an instant SEC eye, and it's likely the short sellers and maybe even the institutional owners will be investigated. We know the SEC and Department of Justice is already investigating short sellers, likely for their work in MULN, AMC, GameStop and many other stocks, so it's likely they're already ahead and already performing this investigation. Guys, with MULN you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward on top of that, which you could always use to buy more AMC or GameStop shares if you so wanted. To get that $100 cash reward and 5 free stocks, all you need to do is deposit $100. If you want 15 free stocks, a $100 cash reward, and a free guaranteed share of Tesla or of Google, all you need to do is deposit $5,000 using the link in the description below. But I really believe that's also why AMC's price drop over the last 2 years is very, very dubious. As StockSense Frank tweeted, he said the recent disclosure of court documents reaffirms the presence of 3.8 million shareholders in AMC. This revelation prompts questions regarding the significant drop in AMC's stock price from $70 per share to $3, $4 or just $5. He said the OBV chart continues to say that 3.8 million AMC apes aren't selling the stock, and the stock price is indeed manipulated. As Frank tweeted, he said, "I think dropping the price was the dumbest act of hubris they could have done. Look at that OBV still going up, which suggests that retail investors and even institutional investors are still buying more shares." He said, I think if they'd have played the exhaust them into selling game in the 40s and 50s dollar region, I think a lot of people actually would have gotten bored and sold when so many were still in big profits. But now at these insane lows, people just keep buying and holding out of spite and do not want to sell for the loss. As you can see from this chart, as Frank was suggesting, the AMC OBV has been increasing ever since 2021. It did have an original peak in June of 2021, but has actually continued increasing steadily since then. But obviously, all the while, the AMC price has been falling. But how can the price fall if shareholders aren't selling? How does that supply and demand equation work for AMC if demand is still going up, as retail investors still want to buy more, and supply is still going down, as retail investors aren't selling shares? Usually if demand goes up and supply goes down, the price goes upwards, but it seems to completely not work for AMC in that way. As we've reaffirmed, the supply isn't changing as shareholders haven't sold. It's clear to me that AMC is obviously being manipulated. Now obviously that has been clear to us for the last 2 years, but I'd also hope the SEC is finally catching on. The SEC can see these figures in open court that 3.8 million individual AMC apes still exist, and they can also still see that MULN has 147% institutional investors. Before, synthetic shorting and market manipulation was simply a myth or a rumour, but now it's been confirmed by the SEC in their recent case against obviously that illegal short seller. It's confirmed in the AMC data, and it's confirmed in the MULN data as well. It's now got to this point where it's even too obvious for even the SEC to ignore it. But even though this illegal manipulation is becoming too obvious for even the SEC to ignore, Charles Payne still thinks the wider market is going to short squeeze first before the SEC even gets there. He said the market rally is poised to go into panic buying mode. The mavens hate to be wrong, but some hate to lose money more. Charles Payne has been tweeting about how the short interest in the market is reaching new highs, but all these shorts are currently being squeezed, and these shorts are losing billions of dollars in Tesla and Nvidia and other stocks as well. So just how crazy these shorts are getting, Tesla is currently the most shorted mega cap with $22.8 billion worth of shares shorted. That means for every 1% that Tesla increases, short sellers lose another $200 million. If Tesla increases by another 10%, like it's done over the last few days, those short sellers will be down another $2 billion. This is why these shorts are currently getting squeezed in the wider market, and while they're being squeezed in the wider market, it won't be long until they're squeezed in meme stocks as well. As I've said, these shorts are going to focus on covering their lower risk short plays first, such as their short plays in growth stocks, such as their short plays in mega cap tech stocks like Tesla, and then their short plays in smaller meme stocks, until finally their short plays in the largest meme stocks, AMC and GameStop. And that's why Good Things Happening posted on Reddit saying, imagine being short AMC right now. Every tool at your disposal has failed in swaying the masses to sell. You call time out and create a court case to stall the price action. You halt, you create fictional rug pulls with no relation to reality or the reality of supply and demand to encourage selling, and it still doesn't work. But all of these attempts have still failed. Bullish news will soon spill out of AMC. Popcorn merchandise, Perfectly Popcorn, box office records, concession sale records have all been broken, and it won't be long until AMC is profitable. This is like a nightmare to them, especially when combined with the wider tech market squeezing. He said, AMC really has to make a substantial move to the upside soon, because right now it's creating substantial business. Thus, the charade of it being a worthless stock will really begin to come under scrutiny. And that's why Bigham's tweeted saying, listen guys, I know it feels like they can, but they can't keep this up forever. He said, when you push things off and never fix the problem, eventually a part of the body dies off. He said the rate is being raised from the Fed, the repos and treasury bonds will mess up the banks, and more will leave to the point they can't stop it. He said June contracts are expiring, we've got LIBOR switching at the end of the month, tick tock, the world's watching you. While these shorts have been able to keep up this game for 2 years now, the shorts cannot keep it up indefinitely. Maybe the shorts can keep it up for another day or two or for another week or two, but at some point they will run out of cash and will be margin called. Just like with the wider market squeezing, as Charles Payne is saying. Yes, the shorts can continue shorting Tesla, but they can't do it indefinitely as they they lose more and more money. Eventually the shorts will be out of money, they will fail to meet their margin requirements, and they will indeed get liquidated. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.